The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the E-mini S&P here today, folks, because we had that big move yesterday, and one of the things I tried to do is to see what could possibly happen today. So as you can see here, I put in what I thought would be the ABCD. Now, you notice that A leg comes in at the 382. That went up to the 786 at 3907. All we were able to do, folks, was back off to this number of 3865. And again, that was nothing more than the 382 of that previous leg. And it was also an ABCD leg. And as you can see now, we have gone up into new highs. This is Christmas Day coming, folks, because if we are correct, and this bottom that we thought was going to come in on the 24th, May has come in now. We've been into this about 5 weeks now. So if we can get about an 8-week rally into the middle of July, then we want to be able to watch this really close, because that's going to be Christmas Day if it keeps following like that. If you check the newsletter this week, you'll see what those numbers are, and they're very clear. And one of the reasons why we're expecting strength today was because the NASDAQ, which had been the leader all the way down, has been the leader all the way up. And it went through the 78% level yesterday like it didn't even exist, like melted butter. And so that's why we were expecting a little bit more strength coming into the market today. Now, those of you that are involved in the bond market, boy, that's been the gift that just, well, it's been a heck of a move in the bonds. Let's just take a quick look at them from where we were just the other day. Just 2 days ago, folks, we were setting, hold on, whoa, what happened? We're setting right at the 382 retracement with a big ABCD there, right at 142.06. We just hit 136, folks. That's down 6 handles in 2 days, and so it looks like we're getting ready to go higher. See, it doesn't make any difference what the Fed is doing. It's the psychology of what's behind this is what it is, and you can't fade these things to the upside, even though you may be very, very bearish, because if they keep going higher, they're going to barbecue you, and you don't want to be barbecued. That's no fun at all. That's for sure. Now, I want to share a story with you that is really important to me. It was important to the gentleman that shared it with me, because even though he'd had some bad losses, he had been able to come back from the thing. But I wanted to get this chart up and show you. This happens to be, it's an older chart, but I want to get this up. All these things are behind him, but I went through this, and the reason why I want to show it to you, because I know many of you folks do this, have gone through this, and I want to give you hope. And hope is always a bad trading word, but it's a good word for psychology. This is the NASDAQ, and what you can notice what he did here on these blue, he bought 5 lots here. He bought 5 lots a little lower. He bought 5 lots a little lower, very, very frustrated. And then he bought 20 lots right here as the market was rallying. It was a beautiful 135 pattern right here. And then he blew it all out and took a loss of 163,000 pounds. And he is recouped from this, but he keeps this picture on his wall to remind himself what he did wrong. And he asked me, he said, what happened to me? And I said, young man, I said, it's exactly what happened to me, because this is what happened to me in 1974. In July of 74, I was way up there at the top, and I started adding to losing positions all the way down. Now, I never added any 20 lot or anything like that, but I was, I had 20 or 30 lots on the whole thing on some of these things, because I dropped well over $1 million between the 28th of July into the October, I think it was October the 17th of that year. I lost it all, and then what? Even though I lost it, it didn't make me any difference. But he said, what can I do to prevent myself from this happening again? And I said, this is the easiest thing in the world to prevent. Because if you've ever read Jesse Livermore's book, Reminiscence of a Stock Operator, he talks about that very, very much. And I told him this is what I did wrong. And when I went back, to Indiana to talk to my professor that got me really heavily interested in the commodities, you know what he did? He laughed at me. He said, "You think you're the only person that's ever gone through this?" He said, "Go through your statements and see what you did wrong." So I went in and I realized I kept adding to losers, adding to losers, adding to losers, adding to losers. Just the exact opposite that Trader Tom does. He adds to the winners. He doesn't add to losers. And that's where you can really get in trouble. When I went to work for Commodity Corporation in 1985, there was one rule that if you broke that rule, consider it your severance, because that was it. You were done. And that rule was never add to a losing position. Amos Hofstadter felt so strongly about that. He had a little plastic plaque on top of his Reuters machine that said never add to a losing position. In my painting behind me here, that many of you have been here to visit me have seen, it says number one rule is never add to a losing position. Rule number two is when in doubt, get out. And so but number one is that. And stop and think of this, folks. It's not very hard to really think about this, because if you think about it logically, if you're adding to a losing position, you're doing two things. One, you've already proven to yourself that you're wrong. Your position that you thought was going to be going up is going down. That's number one. And now number two, which is even more important, you've doubled your risk. And then you add it again, you've quadrupled. Look at the danger, and there's your answer right there at that bottom line, 663,000 pounds out the window. So as long as you don't add to losing positions, even if you don't use a stop, that's, to me, anyway, if you add to a losing position, folks, get another job, because it's just a matter of time before they come around. The man with the sickle with his hooded sweatshirt on, he's going to take you out, because it's never going to work. Yeah, well, we're going to say, well, look at Warren Buffett. Look what he does. Okay, sure, Warren Buffett might be able to get away with it with big bucks, but you think he doesn't have sleepless nights when he's buying stuff? I remember a position that he had called LLL. Triple L. I remember it was some kind of a software program. I don't think it exists anymore, but he was really involved with this at one time. It was one of the few times he stepped into the technical field, or whatever it happened to be he was dealing with, and that he got massacred by adding down to losing positions. And you remember what Charlie Munger did the same thing with what the heck was that? Alibaba. And that one, of course, he probably came out of it okay, but for the normal person, trust me, folks, it's a losing proposition. It just doesn't work. The number one stupid thing you can do in all this business is to add to a losing position. Does everything wrong about trading or investing that there is. You're investing in something that's not working, that you thought it was, and you're doubling your risk, tripling it, quadrupling it, whatever you're doing. Sure, you might come out of it. In all the years I've been doing this, I have never had it work. When I went to I'll tell you, I've told this before, so we'll be right back. Tim Boss is our guest today, folks. 877-927-6648.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, boys and girls, that music that you hear singing is the Fat Lady getting ready to do an Italian opera, the old wedding song that we have here on the show, introducing the program, coming right from Trading Places. But we hit 100 dot 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 in the euro today. So this is where we should get ready to play games. I am going to wait just a tiny bit, and the reason for that is there's still a possibility that we could accelerate down a little bit more, but just from the action this morning, it's beginning to look like it's going to be pretty much like what happened in the corn. My heart breaks when I look up there and I see corn, December corn trading at $613, $2,000 from where I got out. Are you kidding me? Take a small loss and leave a monster. I had my stop too close. That's all there is to it. I'm the one that's I'm the one that's responsible for it. So that's not a big deal. But let's go through here with the euro just to show you what's been happening here today, because it's quite important. This is give the history of it, because we've been very bearish the euro for so doggone long. I want to show you why we've been waiting for this number here. And we'll get it up here in just a second here. You can see the 382 retracements that we made all the way down. This 382 was the 382 off of this number way back at the top. There was the other 382. Here's where we thought we had a chance. That was when we were at 104. I said it might hold here because that was a little gartly. And 20 minutes later, we were breaking down below lows, heading down to par. And that's the name of that game. And now we've got there, so we have to watch it. Now here's what I've been following here so far this morning here in the euro, just to give you a heads up view. I watch these things on a half hour and 15-minute basis. And the reason why I do that, folks, is it allows me to keep my risk relatively small. So you'll notice here that we had the 382 retracement right here. We had another one right here. We went down to the exact 1.618 expansion. That was the finishing of that ABCD, right at 1.618. That's just right at par, just below that 101 level at 100, I think, 0.006. And now we've rallied 100 pips very, very quickly. And that tells us that something big is getting ready to happen. Now, this happened in crude oil. the last day or so. So we need to pay very close attention to it, because these markets, they act pretty much exactly the same way all the time. I mean, they don't do anything differently. That's absolutely for sure. That's the main thing. Let's just give you a rough idea here in the crude oil. This was from yesterday when we were talking about it. Just to remind you, because you want to get ready to play the euro if that's what it's going to happen. You'll see the bottom was made down here. That was your big ABCD down there at that 94 level. And now you come up, you make a 61% retracement, then you make a 382, just like we did in the S&P today, and then you explode to the upside. And that's what's really exciting. But when you look at the crude oil on a little bit longer time frame, going down to a 15-minute chart. Let's go to an hourly chart so we can see more of it in here. You'll see the incredible harmony that you get with the crude oil. And remember, folks, this thing trades $1,000 for each time it goes up $1 a barrel. Look at that, folks. There's your 382 on the bottom. That was today. You see, they rallied up exactly to the 61% retracement at 115.16. Okay, then we broke down to the 78% level, and now we're almost back to that 105, folks. This is a market that's acting really bullish. So remember, what's happening now here in the crude oil may happen in the euro. That's what we want to be watching for, because these are the areas where when you get ready to buy at those levels, you do not have to risk, very, very much money at all, and that's the whole key. So let's keep that in mind as we're walking through and looking at some of these, going through some of these today. By the way, those of you that are trading short term, when we made a new high in that S&P up there at 39.20, that was nothing more than a bigger ABCD. So I don't expect this market to run away to the upside here, but I do believe that we still have a possibility that we might be going up into the 18th to the 20th of July, and if we get to that level, that's going to be something that will be, I think that'll be in the history books, and I like history, so we want to be watching those very, very closely. Now, I've covered the main things that I wanted to do in the euro. I've covered the treasury bonds. I've covered the crude oil. The gold market, where are you, my darling? My gold, my pockets for a gold. With the dollar getting ready to top here, folks, let's get up here and take a quick look here. This is our longer-term projection, and we have to be careful now, because if the dollar is turning, and I'm not sure that it is, it's just got a chance because of that par level in the euro. It might mean something dramatic, I'm not sure. But you remember the 78% level on this came in at 1765. We've been down to 1725 today. I haven't checked it recently, but we had bounced back a little bit. But we need to watch this closely, because and silver got below $19 in the September silver. So we're getting close that they might be getting ready to turn. And I said this also when the euro was 104 and I was wrong, but this time the 104 in the euro is at a monthly ABCD and a 786. So you have to pay very, very close attention to it. That's my 2 cents worth, and that's what I'm looking for. I'm just looking for a place to enter, and I could enter down there at the bottom if I wanted to, but I decided to take discretion and wait a little bit just to make sure, because of the last time I did this, it went the other way, and I don't like to take any losses. But the bonds have been extremely good to the folks here, and the gift that keeps on giving. But we had that beautiful ABCD in the bonds at the 382, and we've had a huge break. I think we're right at 30. I can't check it right now, but I think we were ready to break 3,600. Yes, we did. We got to we did. We got to 136.30, someone's telling me, so that's another one that is acting pretty good. So those are a few of the things that we're paying attention to now. We've got Tim Boss coming up here in just a few minutes. On Monday, we have Norm Winsky. On Tuesday, we have Stan Harley. On Tuesday, we have Jim Bartolioni. On Wednesday, we will have Stan Harley. He was really busy yesterday and couldn't be on the show, so he will come back and see us on Wednesday, and so we'll be able to take a look at that. Okay, someone's asked a question here. How can stocks go up with interest rates going up? Folks, they're two different markets, boys and girls. Two big different markets. You don't want to mess with them, so just stand aside and wait until you see a clear pattern, and then you can do something. It's all related to patterns, folks. ABCD is where I want to be, and that's where I'm going to stay. It doesn't fail me very often. It does occasionally, but my goodness, it's certainly got a lot of things. Oh, the most important thing I got to talk about, shut the front door. Listen, boys and girls, I'm going to have to take a little time from Timmy. This is too important to forget. This is crude oil, folks. Let me get this up here. Here's why. People ask me, why did the crude oil not make the ABCD on some of these charts? The reason why, if you're using a continuation chart, it doesn't work because the values change. You've got to stick with August crude or July crude, whatever it is. That's why you want to be with that hourly chart. You get up-to-date data. That's the difference. 10-4, Rubber Duck. We got Mr. Tim Boss, Financial Cycles Weekly coming up.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have on the line Tim Boss, Financial Cycles Weekly. Timothy, how are you today?
I am doing quite well, sir. How about yourself?
On the green side of the grass, living the dream, as always, my friend.
All right.
Tell us what we're looking at here, and do not forget to talk to us about the bit. We want to know what's happening with the bit.
We're going to share some bit here in a little bit. We'll talk about the bit after the break. How's that?
You got it, buddy.
All right, so we're going to focus here on something a little bit unusual this time around. This is the Mars-Apollon opposition planetary lineup that occurs with some regularity, but it's not a frequent event, as we'll see here in just a moment. Mars, of course, our old buddy in the planetary sphere, our next-door neighbor, so to speak, in the solar system, is all about action and energy. Whenever we get Mars involved, stuff happens. And so we like to pay attention to its cycle. And it's lining up this weekend, in fact, an 180-degree angle to the trans-Neptunian factor Apollon. Our buddies, the trans-Neptunians, the Kuiper Belt objects way out in space, are slow-moving. Apollon has an orbital cycle of about 576 years. It takes that long to make one trip around the sun. Mars does the same thing in about 2 years. So Mars moves a whole lot more rapidly than Apollon does. But Apollon is about expansion, especially expansion in space. Going far and wide is kind of the keynote that we talk about there. And so if we're trying to expand markets or explore new territories or build a business, this one comes in handy. It is all about successful commercial activity in particular. So we put Mars together with Apollon, we would expect some fairly optimistic dynamics coming out of that. And that, in fact, does prove to be the case in most circumstances. Now, this is what the configuration looks like. It's coming up here actually this Sunday afternoon Eastern time. We'll see the exact alignment between the two, with Mars at 3 degrees of Taurus and Apollon hanging out just opposite that at 3 degrees of Scorpio. And so there's a lot that we can say about this configuration, but we don't want to get too deep in the weeds there. Our main concern is how often does this happen? And then what do we do with it when it does happen? So let's take a look at some of those dynamics here. The Mars-Apollon opposition, the biggest factor here is the movement of Mars. And as I say, Mars moves reasonably rapidly. It takes a little over 2 years to make a cycle around the sun. And so these are the dates in recent history and coming up for these oppositions. And you can see about every other year, 2015, 17, 19, 21. The last time we saw this was back at the beginning of 2021 in January. So it's been about 18 months since we last had this configuration, and it'll come up again 2 years from now in 2024, and after that in 2026. So again, this is not a once-in-a-lifetime kind of event, but it happens infrequently enough that we don't get to deal with it very often, so it requires a little bit of special preparation. And as always, what we like to do is do some back testing and check things out here. So what we've done with this chart is taken a look at the trading history of the S&P, going back 60-odd years there, and tracked these occurrences of the Mars-Apollon oppositions when they have happened. And this is the average response, we could say, on the basis of that with the S&P. So whatever vehicle you're using there to trade the S&P, that 0 point in the middle is the exact date of the opposition. And then what happens is we generally are in an upward trend prior to that time, a very well-focused area of trading congestion, kicking in about a week or so prior to the event itself, extending on for another 3 or 4 days. And then we begin to see a resumption of a generally bullish trend. So this is significant enough for us to say, okay, we can study this a little bit more closely and try to figure out what optimum trades look like with this. Now, again, this planetary event is happening on Sunday, so we're looking at trades as early as Monday and checking out the potential here. As it turns out, it looks like a longer-term swing trade is in the offing here as a potential advantage. So what we're looking at is buying shares in the S&P on Monday, on the 11th of July, and then holding that for about 3 weeks to Wednesday, the 3rd of August would give us a good exit point there. With our back testing, this shows an 81% probability of being a winning trade, so we kind of like those odds. Expected ROI over that period of time, about 2.3% on the average. And again, these are average results that we've seen in the past. Past performance doesn't guarantee future results, but we believe that this one might be something worth taking a look at based on this, fairly obscure planetary alignment that we have coming up here. One of the things about using the trans-Neptunian factors is not many astrologers and very few financial astrologers, for that matter, pay much attention to them. So when we can postulate trades on this basis, there's not a lot of competition going on, which helps a little bit too, I think. So that's what we're looking at with the S&P. We also took a look here at this same planetary phenomenon in terms of its potential impact on the gold market as well. And I love this chart here. Again, what we've done is back-tested with all of our history of gold trading and checked out this planetary alignment, the opposition of Mars to Apollon, when that's happened before. And again, that 0 point in the middle, right down at the bottom there, is the date of the planetary alignment itself. The reason I'm always thrilled to see something like this is it's very unequivocal. You know, that going into this, the gold prices tend to move down, and it tends to hit a bottom right about the time of that particular alignment and then shoot back up from there. So it gives us some pretty clear-cut guidance in terms of trading opportunities. Over the past couple of months, we've looked at a number of gold trades and have generally been a little bit frustrated with them because of the high probability or the lack of high probability involved. So they've been a little bit riskier for our taste in many cases. That's not the case, however, as we look at gold this time around. Based on the Mars-Apollon opposition, once again, we'd be taking a long position on the 11th of July, on Monday. Hang on to that for 2 weeks, a relatively shorter time frame there, but a 77.8% probability of this being a winning trade. Given what we've been seeing with gold trades lately, we like that amount of predictability. It looks very positive, especially with an anticipated ROI of about 3% for holding that for 10 trading days for 2 weeks, calendar days with that trade. Again, this is based on our back testing here. It doesn't guarantee that this happens, but we like knowing what the chances are with something like this. And then we also decided to take a quick peek at oil. And as is the case, we've been when we looked at oil in recent months here, we've been tracking this ETF, trades under the symbol USO for U.S. oil. It provides a pretty good surrogate look at the oil market, which can get very, very complicated otherwise. And once again, we're seeing a chart here that is very, very interesting because we have more or less congested trading action moving into that and then hitting a precise low on the date of this planetary alignment. So when we see this kind of signal and doing our astro-trading work, it always catches our attention because it looks like something's happening in correlation with that planetary dynamic, and that's kind of what we're all about here and trying to figure out how all this stuff works. So
Tim Boss of Financial Cycles Weekly, we have a question when you come back, so don't leave us, okay?
All right, I'll hang on here.
We're going to pay a few bills. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Tim Boss. Tim, we have a caller from down south there in Rampa Savannah down there in Georgia, and he asked the question, how much of a orb do you use? I mean, the variance, because the orb on some of these, because they move slower, was it 2 days, 3 days? How do you calculate that? Because that would affect the risk on the trade, wouldn't it?
Right. Now, what we're looking at here is that's a great question, by the way. I appreciate that Zach has shared that.
He's a great man, so he knows what he's talking about. So
absolutely. There's lots of intelligence behind that. I spotted that and sent me a forwarded copy with my email here. The question is this: how fast does a planet move, and how much time factor do we allot for that alignment? And he mentioned in his question there the movement of the moon, which moves incredibly fast during the course of any given trading day. We're going to see the moon move about 3-4 degrees of celestial longitude. So it's a very fast-moving dynamic. We really only use the moon for intraday trading alignments. With Mars, we have an average motion of about 1/2 of a degree per day. So if we get the exact date of something like that, then we can say it's going to be within a 1 degree orb of that 2 days before, 2 days after. And so that's a pretty tight configuration there, so we can get a little bit of a fudge factor with it. What we are doing, though, with this back testing is slightly different. We're looking at the exact time of that alignment, which gives us a 0 point in our chart here. I think we still have up that chart for the oil ETF. And then based on that, with this chart, we're seeing here calendar days and not trading days. And so we can see the average price differential moving outward from that. When we get a strong alignment like this, and it hits that exact bottom on our trading chart, or our backtesting chart rather, then we have a pretty clear sense of its impact and how strong it is. That's not true with every market. So we're looking here at the planetary alignment, and in this case, it's fairly precise with that Mars dynamic. Again, we're going to be given a period here of about 2 days before, 2 days after the exact date. In this case, it occurs on Sunday, so it could start having an impact as early as today, or on up into about Tuesday, early Wednesday of next week. So that's kind of the optimum phase here with that. But then what we do is go back and look at all the potential configurations coming out of that to find out where it's most reliable. And in this case, with oil, what we've done is back tested that, and we can say that we would have the greatest confidence in a trade buying a position in this oil ETF on Monday the 11th, next Monday, and then holding that till Tuesday the 19th of August. A pretty long swing position there. Now, here's where things get weird and scary, because with our back testing, this shows a 100% probability of it being a winning trade. That always causes me to scratch my head and take a step backwards, because whenever anything's 100%, I automatically get suspicious, right? So you've been around long enough to see that yourself, I'm sure. But but the fact is, we have 8 previous examples. Remember, this is something that only happens every other year. So we go back a bit here. We have 8 times that this has occurred before with the data we have available with that ETF, and 100% of the time, the prices have gone up afterwards based on this configuration, holding it for this period of time. And the ROI has had an average return here of about 12%. So what this says to me is we got to keep an eye on the oil markets here, whether or not we want to take this exact trade or just look at it in general. It's a strong indicator that we can see a real surge in oil prices kicking in as early as this coming week. And carrying on through well past the 1st of August, and anyway into the middle of August potentially. So that's kind of the way we use that. And again, that's a wonderful question, because we're looking at this event then as a triggering factor, and we're less concerned with the exact time that happens as what happens afterwards. If we're moving ahead 10 days, 2 weeks after the fact, well, what has the market done in that kind of interval on the basis of this particular pivot point? I hope that addresses the question adequately along the way.
Jim, the only thing that surprises me here, of all the years you've been on the show, we've never seen 100% probability.
Nor have I, and I'm almost embarrassed to offer this. It's like, and again, we have to say, past performance does not guarantee future results, especially if we just got 8 iterations of this. So we have to keep all these factors in mind here. And it's kind of a weird feeling to see that kind of a number. But anyway, we'll move ahead.
Sure
here,
is. Right? Go right ahead,
take a look at Bitcoin. We got time to do that?
Amen. Let's get on to it.
All right. So what's been going on with Bitcoin is it's in the news a lot these days, right? As is the whole cryptocurrency space, because we've seen some dynamics in the fundamentals with the bankruptcies among exchanges and all kinds of shenanigans going on. This whole cryptocurrency space is way over leveraged, and a lot of stuff that's not readily accountable for happening behind the scenes here. But this is our chart for Bitcoin, and we continue to rely on our planetary price lines for Venus and Chronos in the 4th harmonic. The diagonal lines are the Venus positions. The horizontal ones are positions of the trans-Neptunian Chronos. And we have seen now over an extended period of time how important those Chronos levels are at establishing support and resistance zones for Bitcoin. And that continues to hold sway. Last time we talked 2 or 3 weeks ago, we've just seen that big drop and the breaking of the support zone at the 28,000 level. Let's see, I think I've got this close up here on this. Yeah. And we were identifying at that point the significance of this potential support zone at 19,210. Again, coinciding with that Chronos price line. Now, as we look at these price lines with Chronos, especially with Bitcoin, the trading is so volatile. We'll see swings of 400 or 500 points on a given day on average, and that's a calm day in trading. And so we're not looking for this to hold support, down to the penny necessarily, but it's a strong indicator of the zone that we want to pay attention to. Key word here is zone rather than exact price on this. And so when we see prices trading below that range of the 19,000 or so, then for us it is right now a buying opportunity, because we believe support's going to hold there. If, on the other hand, we should see a significant move, a sustained one below that zone, and we start seeing trading down in the 18,000, 17,000 range, then we're going to be looking for support at that lower level at $10,210. We've not gotten down that far in recent trading, so we're still watching support holding here. Right now, we've seen the prices short-term bouncing off of that level, and so we're optimistic in terms of looking at this support holding, and continue to add to a long-term, long position in Bitcoin on this basis. So we're buying in the $20,000 range or below at this particular point.
Stay with us, folks. Tim Boss, Financial Cycles Weekly.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, we're back, folks, and we're speaking with Tim Boss, Financial Cycles Weekly. Tim, we got anything free coming up for the folks? They always like things that are free.
Indeed. Got a free webinar. In fact, we're doing one tomorrow, so go ahead and get connected today here. We've got this web address to go to, bit.ly/TimLarryP. Everything's lowercase except for the initials for the names, T, L, and P. They are all capitals. That is a case-sensitive URL. Go there. You get signed up for our list. We'll let you you know about how to get signed up for the webinar tomorrow, absolutely free, as well as keep you up to date with other things that come along from time to time, so you can stay connected with our work here in Astro Trading. Our whole mission is to try to educate traders to the Astro Trading advantage and provide resources on an ongoing basis. So we not only have our free webinars, but membership programs, training courses, and all kinds of other stuff that you may find helpful if you want to look at adding this to the mix with your trading.
Wow, it's great. Listen, my friend, thanks for joining us today, and I really hope we have you on again soon. And stay on that green side of the grass, living the dream, my friend.
Absolutely. It's always a pleasure to share some time with you and with the listeners. So have a great weekend, and we'll talk soon.
And we will be talking about that 100% trade in the future, my friend.
Absolutely. It's actually embarrassing. But,
yeah, I tell me about it. I go through that. Well, I understand. I understand the situation.
We can kind of, make excuses once in a while, right?
Amen to that. You bet. Folks, I'm going to share with you one more chart here. This is the chart of crude oil. I'm going to get this up here to take a look at it because we had a nice move there. And let me see, did I get it up there right? No, I didn't. What did I do wrong? Hold on just a second. Wow, I did something wrong here. Shut the front door and raise the rent. Well, we're going to hold that for another time. There it is. It's not crude oil, folks. It's corn. Look how the patterns are exactly the same. You have to remember that. 382 is what it'll do, so keep an eye on that 382 when we get to the next segment of the old Stop and Be. See you on the flip side Monday, folks. Norm Winsky, live every day in an attitude of gratitude and may God bless.